What's good? What's good? What's good? Crazy morning it was. How's everybody doing? Just caught a trade moments ago. Waited. Just found a solid reaction coming into New York session. Hopefully, there's a lot of you guys that probably caught it. Let me know in the chat. We're live here. If you're inside the inner circle, I did send a signal moments ago. Dropped a signal. Was looking at gold coming into New York session for a potential reaction around here. Around $4,700. It gave a pullback and it gave a structure shift. That's the thing too. I was like, I was looking at the 30-minute and I was like, all right, we made a higher high technically here. I was looking at that 30-minute, like we did shift out a bit. We broke some of these highs here. Just sent a crazy trade. It was a pretty crazy trade. There's a lot of volatility in the market, so every trade's probably going to be crazy. Cause literally this, you know, my TPs, my last TP was 450 pips, 500 pip TP. We hit that TP. Market ended up going up 800 pips. Look at this on 001s. Was up $4,000 on 001s. I got out already before it pulled back. Right now, less is more. So you might be looking for a lot of trade. It depends on your energy, how you approach the market, how quick you are too. Because if you're getting in and out quick enough and not holding on things too long, you could get some quick in and outs. Or less is more. Like you're getting a lot of pips right now, so Positioning yourselves to take trades when there's good opportunities. Not as frequently maybe as you're used to. Because knowing if you have one or two good trades in this week, you could get 800 pips. Like you could get a trade that goes 500 to 800 pips, 1,000 pips, right? So if you position yourself the same as you always do, even in terms of risk, maybe lot size tone it down a bit. Maybe lot size tone it down a bit, but even if you keep the lot size the same, it'll be more rewarding right now if you manage to do that, because there's a drawdown effect right now. There's drawdown control. So I like waiting for maybe good entries where you're confident. Like I was entering down here for gold buys. And I said good stop loss rules right now, like in case the market goes down, is like what I do. When there's volatility, I'll say like stop loss is if the market breaks underneath this price. Like if there's a lot of volatility right now, so I'll use like structure. But I'll say like if I have a setup, like if the market invalidates that setup, let's say if a candle breaks underneath my stop loss point or my structure point. But like right now, this week, like you don't have to probably force the entire week. You could probably find a couple good, like this morning I found this trade on gold when it was coming back to like $4,700. 4,700 here. There was a pullback we were getting, and this is a trade I would have normally taken any day, regular day. Like if the market's moving hundreds of pips right now, thousands of pips. I mean, like realistically, thousands of pips. This is a normal trade I would have taken on a normal day, even whether the market's moving hundreds, thousands of pips. So the setup was there. There was a setup here. I would have taken this on a normal day if the market wasn't moving hundreds of pips, just on how it looked. This is what I was looking at moments ago. A little bit after 9 in the morning. Market made this higher high here. And a big move up. That's a big move up it made, which like takes out some of these highs, takes out some structure along the way up, creating that higher high. So like even like getting bounces right now, you're getting a lot of pips. So yeah, not rushing into every move like one move at a time. Like this is literally fully come back. Like I'm pretty sure this thing pretty much like fully came back after moving up like 900 pips. It was a pretty crazy move. And yeah, like market dig down, traded into these candles, was kind of looking like a break and retest almost, like in the moment. Like when you look at this chart here, it's pulled back, but this is what it was looking at. I put this chart saying I was still holding it. It's like a break and retest, like getting a shift up. Market was pulling down for a bit. Luckily, the dollar turned over for a quick period of time. Like the dollar did a quick drop. That helped. Like once that started dropping, gold came in, and I was looking at the dollar like this thing. I was looking at the dollar like I was sitting there talking to myself like, all the dollar needs to do is drop a little bit, and this trade will work. I was looking at the dollar pumping, and I'm like, I knew all the dollar needed to do was a little bit of a drop to bring in that enough of that momentum. Like the dollar had a bit of a drop, and I was like, if this thing drops, because gold has been dropping. Like if this thing drops, it's gonna have a bounce. It's gonna bring a bounce in. So when you're looking for buys on gold right now, you gotta watch the dollar too. Like if you're looking for like good buys, like times where it will move, like it just moved. It moved. We just saw like dollar move down, gold moved up in that moment because dollar was pumping. So like here or here would have been a good buy for gold. Like probably like in this time here, somewhere in here probably would have been a good buy for gold, like as this was dropping, or in here maybe around like 1:30 in the morning before London session, going into even London session, would have been a good time to buy gold. Maybe looking at like reactions, like getting a reaction. Like see, the dollar just had this reaction. That helped this move. That for a period of time helped this move. There could be moments when you're looking for buys, vice or sells on gold, you know, vice versa. Dollar strength coming in. Like if you look at 1:15, 1:30 in the morning on the dollar, gold was pretty much like making a lower low. So gold was making like a lower low, like pushing down, while the dollar was finding a top. Dollar was pushing up, making a top, while gold was sinking lower. Dollar shifts, a gold buy comes in. And there's another one here, which was at like 4 in the morning, which is like right here. Up here more when this pushed up. So even like if you watch the dollar closely, like right now, see how it's bouncing? And what's gold doing? Gold's kind of like bouncing down. I would use the dollar a lot too this week. Like study the dollar in relation to gold's movements. If you're, because when the market starts moving like this, like with a lot of volatility, and it shocks you, it takes you by surprise, you want to adapt to it. You want to find different ways to adapt to it, and not get ahead of the market, not get ahead of yourself, not burn yourself out, not waste opportunities. So when the market's like this, it's good to adapt. One way you can adapt right now is keeping an eye on the dollar in relation to like gold's movements, because right now small movements are providing hundreds to thousands of pips. So it might just take something like this, something like this, something like this. It doesn't have to take a really big effect with the volatility, where you might see maybe the dollar have a slight bearish reaction, or the dollar have a slight bullish reaction. You might see a time where the DXY has a slight bullish reaction. And watch those moments, like pay attention. Like you don't have to trade every moment, but like even right now is a moment where you can like look how the dollar is moving. Gold is obviously kind of dropping in that sense. So paying attention to this, like kind of these kind of moments, like where you see shifts happen, it'll help you better understand this market, how to trade it in the near, how to trade it going forward. Because yeah, that trade that I just caught, I was sitting here like on my own. Like I sent the signal and I was like, man, like if the dollar just can, I was sitting here like I knew like all the dollar needs is like a little bit of bearish rejection, and this will pump here. And it did exactly that. So once you watch these two together a little bit, when volatility starts kicking up a lot, like you keep an eye on both together in relation to their moves. It'll help you better anticipate things. Like I was anticipating right here, there's a buy here. I'm like, okay, there's a buy here on gold setting up. Literally looking at the dollar, I'm like, if the dollar can just have a bit of a pullback, I knew this would have been kicking in. So like moments like that, even right now, look at dollar just pumping, gold's gonna fall. Gold's probably gonna fall a little bit more because of this. But it's like if you're looking for that buy on gold, let's say you're looking for that buy on gold, it might make more sense if you see this like go up and it starts to reject a bit. It's like, oh, here might be the buy, where it starts rejecting, right? You're looking for that buy all the time. It may be better to just look at the two together, right? Take your time. and wait for this to start rejecting. Let's say you have a buy lined up. You're seeing a buy lined up. You're like, okay, I like buys. I want to buy, right? It'd be better to wait to see this start to turn over when that happens, so you don't rush into things. You don't go in early drawdowns, because like, we could be used to early drawdowns, but early drawdowns right now might be a lot of pips if you get in a little bit early. You have to be used to like how the market's swinging right now. Like going down, like you enter a trade, you might go down like $10, $10 to $20 pretty easily, like with the market, even if you're waiting for like a good entry point. Maybe like $10 range, $10 to $20 range of like, depending on how you're getting in. So like, even there's a sell on gold. That's when the dollar started like pushing up strong here. But like, you see how strong the dollar pushed up and gold didn't push down as much. Right? Gold came down, but the dollar really had a really strong recovery. So now you see like dollar just wicked. It's like there's wick rejection happening on the dollar. It's like, okay, gold's probably gonna reject now a bit, maybe. Like, that's quick. Like, it's really quick how it's happening right now. But like, there could be certain moments where it's not as quick as like that, where you have to think quick sometimes. The dollar, I'm telling you, will help prepare you in some times like this. Like, it helped for the trade that I was looking at this morning. So going into like weeks like this, months like this, because obviously gold's moving more than you might expect it, right? Like, you're looking at price and you might look at it every 20, 30 minutes and see it's up $50 or down $50 or $100, right? Completely different from where you're looking at it, right? And that's where traders, this is the stage where most traders fail, is they don't adapt. It can be hard to adapt to these climates in the market. Let's say like the market has weather. There's like a weather to the market, and that weather is called volatility. It's called volatility, all right? So there can be times where volatility is significantly higher than others, right? And this is parts where traders can make a lot of money, or this is parts where it can ruin traders' psychology. Because if you're used to trading a certain way up to this point, you know, and then the market changes and the market's moving thousands of pip swings, it can mess with your psychology, because you might be used to just doing something normally and it might not be working for you, right? How you're normally used to doing it, right? Because of the volatility, or the volatility might be shocking you and surprising you. So it's stages like this where patience and discipline come into the most part. Like, you're gonna miss moves. It's stages like this where you understand like less can become more. Same approach, same execution. So far I've taken one trade. I sent out the signal to, this was the trade, 4,700, 46.95 area. This is one of the rules I implement on my trades. It depends on what I'm seeing, and obviously if there's like a lot of volatility, I want to use that rule, because it's like, okay, there's bigger zones to capture right now with price. So like, if I see a setup, like, I'm giving myself breathing room right now. Like, obviously, like, my entry was here. Stop loss was if it broke and closed underneath 46.80, and it never did. Like, it came to 46.80, but it never broke and closed. Like, realistically, I could have gave myself a bigger stop loss, but I understood, like, if it breaks strong enough underneath 46.80, then it's like, okay, what I see is pretty much invalidated. It's still holding that area. Right now is probably, now when we look at the market, what did gold do? It's probably scaring a lot of traders right now, obviously. But like, we got to realize what time of the year it is as well, everything that's been going on in the world. We came down to $4,500, even went down to $4,400. Now, is that terrible? It may be. Like, I took some trades along the way and had to close some trades early, take some early losses before that one on my own. Sent you guys the first signal. That was the first signal I sent. But even I took a couple like small buys, like thinking like it would reverse, and no. So I let it come down. I was explaining last night. If you're on the inner circle session last night, anybody who's in the inner circle, I was explaining last night. I said let it come down to 4,500. Let it come down to even lower than that if it has to. I think we were on like 12 hours. When we were on last night. Anyone who was on with me last night in inner circle, I did say, I was talking like if it can come to 4,500, I'll buy. I know we streamed last night, and everybody was wondering like what to do, and I was just saying I'm gonna wait. Wherever the last night's stream is, I was saying I'm just gonna be super patient and honestly just wait and see if this thing can come down to like $4,500. I know we were talking about that last night. Eventually it did. It did come to 45. I said last night. Anybody who streamed with me last night, I talked a lot about $4,500. So like, look at that area that got tested. This could be a big buying opportunity for gold, realistically. Like when you look at it on the daily, like gold has been in a serious uptrend. So a lot of people are calling the top on gold. There's not enough time in it. There's a bit of information to say that, but not enough time yet. Like, okay, we have some information to maybe say, yeah, there's signs of maybe a top being made, but not enough time to tell that for me yet. There's some information maybe there to say in terms of, oh yeah, maybe a top is made, but not enough time I think has passed by to fully, approve of that. Like saying like, okay, yeah, the uptrend is completely broken. Like you're gonna need more time to discover that. You have some information in the market that could indicate a top, maybe a shift. But like when you look at weekly came down all the way to this area. Gold could literally just be trying to shift back up and go right back up. Like it could be trying to just literally shift back up and try to go right back up, reclaim. Like we have been in a serious, like we've been in waves of uptrend. This could be a lower high. Not being optimistic, but this could be just a lower high. Or, a higher low. HL. Trying to be made. Inside of there, it's probably like the market would maybe like something like this. Like recovery, retracement before going up. Maybe even deeper than that. But like this big drop could be potentially like it's potentially turning into a big buying opportunity on the bigger picture if all this holds. I mean, finding swings, you really have to look for good entries. One thing I was explaining last night is trying to use like good prices. If you're on the inner circle session last night, I was talking about like, you're gonna have to use like good prices, like 4,600, 4,500. Look, we even went to 4,400. So you have to be prepared for taking maybe entries at different prices and seeing if they hold. Like I was explaining last night some stuff about this, like 4,600. You can see like 4,600. There was buy attempts there, but it didn't really hold. Even 4,500, I was gonna send a signal at 4,500. That was the first signal I was gonna send. It was gonna be a buy at 4,500, but it reacted like 700 pips in like 15 minutes. So I was like, oh man, that would have been the trade. So even like these prices like that were used to reacting longer, you could get 10-minute reactions that give you 500 pips right now. And then go down, find the next price. Next price reacts 1,000, 2,000, 3,000 pips, almost 4,000. 4,000 pips at 48, topped out at 4,800. So you're gonna have to be wait. Like I was buying at 4,700 this morning. And it even went a little bit below it because we're kind of higher up here. But you have to wait for clean, good prices and not just rush every reaction you see. Because, like, even if you wait for the right price, like 4,500, for example, I was talking about that all last night. I was going to send a signal there. I was watching it, and honestly, 5 minutes, because I looked at it a couple minutes late, like, I wasn't looking at the chart. I missed it, and then I watched it go up 700 pips. I was like, oh, that would have been the trade. So even the right price right now, like, it might not be as long of a reaction. You can see $4,500, for example. We're looking at the 5 minute. It's not like it looks like the greatest reaction. It's like, okay, the 5 minute reacted, but that reaction is 700 pips, right? It moved $70. So you can see like $4,600, even $4,700. Like, and when the market opened, it came to 4,700. It reacted off of it, and then it comes down to 4,600. It reacts off of it, retests 4,600, breaks it, goes to 4,500, breaks it, goes to 4,400, starts to reverse at 4,400. So you gotta be patient with good prices. I mean, like these types of prices that are spread out, really spread out, because the market is giving you those swings of volatility. Like you can see, we literally just went from 4,800. You can see resistance at $4,800, and you can see we go down to 4,700. So right there is 1,000 pips down, 1,000 pips up, almost 1,000 pips back down. If you're quick, it can be rewarding. Like if you're watching certain rejection candles, you're quick. Like the DXY may help, like those quicker moments. That's why I was talking a little bit about the DXY could help with some speed. Like when, like shifting points, here's a shifting point, here's a shifting point. On the DXY, we see two big shifting points right now. Like there's one here on the 5 minute. And now we're looking at the 5 minute. The 5 minute's moving a lot right now, right? So like that was a sell here on gold. So ever since that kind of bottom that came in, how will you get good at like kind of anticipating stuff? Is watching it, like just watching the dollar, not always trading, just watching it live in action and seeing these moves, seeing these types of reactions happen in real time. That's how you'll get better at the intuition. That's how you'll get better at, like, you know, quicker senses to things, intuition to things, reaction. Like whether you're buying or selling, whatever types of moves you're looking for, like dollar's gonna help bring in some shifting points with this type of volatility. A really good instrument to use right now. And yeah, like you're gonna want to line out good prices. You know, like right now, like if you look at my chart, I have every $100. Because even if they don't work, it'll probably trade down to the next level. Like you break a level, it's probably gonna go down to the next like $100 level. So anything in between is kind of a little bit more risky. I mean, just because the higher volatility. Like you could see good prices, like good prices are stuff like $4,800. That's a good price. So it's a whole number. We're talking about the zeros. When you're using these prices, you may need to give yourself some distance around it, make an area around it. Especially if you're maybe combining some other type of analysis with it. You have like an area to the left, right, of the chart. You're marking these areas like $4,800, for example, $4,700, for example. You're gonna want to make areas around these. Now, since we know the volatility, and this is something we already do normally as traders, this is one of our strategies for anybody who's new here. If you're new here, subscribe to the channel. Now, you're gonna want to make areas around here. You're gonna want to think in terms of like price could wick above or wick below these prices, these good prices, right? These are good prices, like $4,700, $4,800. I'll move my camera a bit. There we go. I'll make me little. So you got 4,700, 4,800. Normally, those would be like our weekly ranges. Now we're looking at New York session here. Normally, we'd be marking those types of prices, that distance, on a higher time frame, but the market has really, you know, picked up with volatility in the last weeks. So that's why we want to use those, right? Those can become our daily levels now. I suppose these can be looked at our daily levels throughout the day with the way the market's moving, and still takes patience. I mean, they're big zones. But when you mark these, you may want to consider, it was like, for instance, I was buying at 4,700. So I should have made my entry zone 4690. It's really not that big of a distance when we're looking at maybe entry zones. Like if we're using $10, maybe around these prices. If we're looking at $4,800, for example, $10 is going to be here at 4,810. It even goes above it, like $12. Now, realistically, right now, the market's like around these prices, moving more than $10. If we look at $4,700 here and we were to make a $10 zone below it, okay, we got some more control there within the area, right? With the price, you know, the price, it's a good price. In the moment, it wouldn't really hold if we do like a $15, $20 area there, but it gives you, with this volatility, like if you have a good setup, you have a good price, it might give you a bit more control in the setup to hold. Because if you do go on that quick drawdown, you might be like, whoa, what's going on? So if you're kind of using areas around these prices, even if you're not entering in the areas, you're just thinking like, okay, 4690. Even if it comes to that, it's still, because of how much volatility there's right now, it could easily reclaim 4,700. That was my mindset going into that trade. Like what I'm explaining right now is the mindset going into that trade. This was a crazy trade. 001s right now. Look at, I got 001s on this trade. Well, had 001s be doing damage right now. They'd be doing damage right now. Yeah, like waiting for the best prices. This 4 hour looks like it could, like 4 hour enter again. I'm not gonna enter gold again. No, the 4 hour is looking kind of like it could try to turn over maybe. I'm not looking for any more. If I look for another trade, I'll send a signal in the inner circle. If you're inside the inner circle, I sent one trade today. If I look for another trade, I'll just send a signal. Not gonna do it live. But yeah, like that trade, like I think it's one trade at a time, because you gotta understand, like the market's moving hundreds of pips. Like what you're used to getting with pips, like the market can obviously give you more right now in a couple of trades. Like you don't need to over trade if you catch like a few good moves in the week. That could set your account up for the following week, you know, give yourself some room to scale. While you kind of stay self-aware to the market and build like that self-awareness and like understanding of kind of where the market's at, the volatility and everything. You catch a few good trades. All you need is like a few good trades. We caught one this morning. It was pretty crazy. Timing, like that came into New York session, so like I'm just gonna be looking for my trades around the opens of sessions. So around New York open, around like London open. So like I'll be on the chart, like London opens like 2-3 in the morning. I'll be on the charts a little bit before the open, but I'm only gonna look for my setups around like key times. So like London open or New York open or like Tokyo open where maybe volume comes in, something happens. Like for example, this morning coming into New York, I was getting a pullback. Look at this setup. Like, you guys should be able to see the structure here, the technicals. So I was looking at, we had this red candle here too, this down candle. We are above like this structure. We made that higher high. So coming into New York session, looking for that trade. Like, I'm not going to overtrade the market. Overtrading the market is looking for another setup or taking the same setup again and re-entering buys. Like, I'm just going to look for my setups, one setup at a time, coming into the sessions. I'm not going to be looking for 3 different setups in one session, or, you know, that's overtrading right now. Like, you don't, with the way the market's moving, think about it. It's moving hundreds of pips. As we go into the month, like, we're starting the month out, you want to gauge this volatility. You don't want to just be pushing buttons, recklessly get into trades, overtrade the market, because there's a lot of volatility right now. You don't want to chase green candles. I waited for a pullback, right? Wasn't chasing candles. I waited for this pullback. So, I mean, there's going to be bigger pullbacks, obviously. But, like, lining that up with price, confluence, like, we might come down. Like, if we might come back down to 4,600, 4,500. Like, London session, or even come, like, if you're on the charts, like, Tokyo session, there would have been good buys at, like, 4,600 twice. 4,700 market open. So even just using price, if you're on the charts, like if you're on the charts a lot, like the market could be at different prices anytime. Like if you look at since it opened, 4,700. And then I think it even tapped like 4,900 almost. 4,600. 4,500. 4,400, and even now, like, it came up to 4,800. There you go. Obviously, more prices you can focus on, but then that just gives you a lot more, like, maybe exposure to the volatility. So spreading it out is probably going to be a better thing to do right now, because if you're using every $10 or every $20 or every $25 or every $50, you're going to expose yourself to more volatility. So maybe better to give yourself farther zones in terms of price, like where your levels are at. Because if you're closer, you're just like more inclined to probably find trades that maybe you don't even need to take. So every $100, watch those types of prices this week. I guarantee you'll see a few good reactions and setups. You'll probably miss some setups. When there's volatility like this, like when you're coming into a market that's like this and the volatility is crazy, right? It might take even missing some moves, like seeing reactions, to just get like a flow of like, okay, how the market's reacting, building some self-awareness. When like you see volatility increase like this and it's like the market's moving like 1,000 pips a day more. Up and down too, like up and down. Gold's moving like crazy right now. Like think of it, like up and down, it's dropping $100, going up $100. So it's moving thousands of pips right now, not hundreds, thousands. It doesn't always move like this. Maybe a few times in a decade. Now, I've had experiences like this, and I've been trading for 11 years. I've had times, like even in the last year, since 2025, there has been times where the market makes a certain move, and it's like next, like the last big time was in October. And then like last April, where the market moves a certain way, and in that movement is the volatility that you're not used to. And then even afterwards, this was a phase where gold was moving with a similar like sentiment in terms of like what was happening, like how traders had to adapt. Like you really would have had to adapt here in terms of the volatility and how you might have been trading before in certain conditions, in certain times. There's been other times where the market has moved like this, maybe not as big as a drop in a singular day that happened. Because people have been asking me, Evan, have you seen gold move like this before? And I've been like, the way the market's moving is, it's not just even about like the price drop, how much, it's the psychology too behind it. Because this is where most traders blow everything, and they don't learn how to adapt. So there's been other times where you would have really had to adapt. That's why a lot of traders didn't do well in the beginning of 2025, because like the beginning of 2025, gold automatically started moving more pips than what it did the entire like months before. Like coming into 2025, and then so many times in 2025, gold was moving more pips than it usually would. So this is just more extreme in terms of how much it is too. So like, I mean, you gotta stay patient one way or the other. Adapt to conditions, not get ahead of yourself. If you get ahead of yourself, you'll burn yourself out. So I mean, one trade at a time. I set the trade this morning. Here, I already broke it down. It hit full take profit. Yeah, there were a lot of people caught the trade. Everyone's using 001s. Everybody be trading with 001s. It's like 001s. Hopefully you guys got that trade. I saw a lot of action in the chat. We got Jeffrey Epstein. Yeah, I've seen that stuff. It was a good move. The setup was there. It was a regular trade I would have sent on a normal day. You just gotta. There's gonna be volatility with any trade. Gave us the move. I'm not in any buys. I'm done for the morning. Next, like I said, gonna be looking for one trade at a time, one day at a time, or one session at a time. I'm gonna be looking for my setups going into the market opens, but I'm not gonna be looking for like a bunch of trades. Like, just gonna be looking for one trade. If I get that trade, it's like, all right, session's done. Let me look for the next session, maybe later on. That way you're not over trading the market. Like, if you like, that way you're not over trading the market. Like, that's how I'm gonna trade this week. You guys can trade how you guys want to trade. If you guys want to take as many trades as you want, go for it. But signals, I'll be dropping signals one at a time. This was a trade this morning, 4,700, 46.95 area. I did say stop loss if we break underneath 46.80. There was a buy setup coming into New York. Maybe tomorrow there's another buy setup coming into New York. And I mean, it's worth waiting right now for setups because, again, this trade game, like at one point this trade was up 800 pips for me. Like, I held it a little bit longer after it hit TPs and it ends up going up 800 pips total. So like, if you don't have the patience to wait, like there's gonna be opportunities. Maybe there's another buy in New York tomorrow, and that might seem like a far time away, but again, what if it's the same reaction and gives a good 500 to 1,000 pip reaction? Then it's worth the wait, right? So you gotta have, that's what I mean by patience. You gotta have that patience to wait. If we're trading, again, what I mean by adapt is like, think about how we've been trading the last month. Okay, we might not be able to just trade exactly like that 100% of the time right now. Like, I know a lot of you guys want to click buy, click buy, click buy, buy. Are we buying? Are we buying? Are we buying? No, we got to wait for setups to really buy. Like, we can't just, you know, like, the volatility right now is significant. So I know a lot of you guys, I know you want trades, you want more trades, but it's going to be one at a time. Like, you need patience. Like, I called out a trade here. So it's like, how we've been trading the last few weeks. A lot of you guys are asking, like, oh man, some of you guys are scared, like the market's over, we're not going to be able to trade. I saw some of you guys say in the chat that the market's over. Guys, the market's not over. You just got to be patient, adapt. Like some of you guys, this is what happened. This is why when the good times are there, there's gonna be times you're winning, flipping your accounts. And then there's gonna be times where it's not as easy. Trading is the simplest and hardest thing in the world. So when the good times are there, you gotta take them. You gotta keep them, right? When the good times are there, you gotta keep them. It's like crypto. When your crypto portfolio multiplies, you gotta take the good times when they're there. If your crypto portfolios pump, right? You gotta take the good times when they're there. Otherwise, the good times will run away from you, right? So like, a lot of us have been used to easy buys. If you've been locked in the last 60 days, it's been easy buys. Okay, has it been easy buys the last 3 days? No. All right, relax. Like, it's been easy buys since November and December, guys. Right? The market's not always going to be easy, especially based on like what one side is doing. Like, we've been catching buys since here. All here. If you're inside the inner circle, I've been sending you guys buys since November 3rd. I've been sending you buys since down here. I've been sending you guys buys since all down here. Like, there's entries that I've called out. Like, I remember here. Like, if you go to, I remember calling out entries here. Like, I've called out literally buys like from back down here. Like, not just once or twice. I'm talking like a good amount of times. The markets give us, like, think about it, gave us steady buys. So like, it's done that before. Think about here. A lot of you guys made so much money. Anybody who was locked in the inner circle with me from end of August till end of October made money. We had people flip $500 to $20,000, $650 to $23,000 back in those times. I'll go back and find it in a quick minute. I might have to do a little bit of scrolling and go back to like, I have to just skip a couple pages here. Like, we had people in those days go from literally, like, I'll show you, I'm not capping here. It's all facts. So we have, like, I'll find a few of them where it was like, we've had these times before. The point I'm about to get to a real raw point, because we've had these times like 4 times in the last year where it was easy buys, and then the market turned. And it was still easy buys after that, and then the market turned, and it was still easy buys. Like, we've had times where it was just easy buys, and then the market turns. We've had it a few times in the last year. Back in like September to October, I had students make crazy money. Like, I'm gonna show you guys a few examples that I can find back from those times. Like, some crazy flips happened like in those days. I want to find a few of like the big ones. Just bear with me for a minute. There's $300 to $3,300. Just give me a minute. That's not what I'm talking about. That's not what I'm talking about. So a lot of you guys, and some of you guys might see your face here. Some of you guys might even see your names here. Watch when I pull some of these up that I can find. Was this one? This was back in September, $3,000. You can see the result there. But that's not even like what I'm looking for. That's not even what I'm looking for. There's 2 things I'm looking for. I'm probably passing a few. I remember this guy was, I think it was him, was able to turn 650. I'm pretty sure it's in Discord. 450 to 7,200. I remember there's 2 people who went from like 650 to over 20,000. I'm gonna find it. I'm gonna find it. I'm gonna find it. There's 1,000 to 10,000, 200 to 6,000. There's $600 to 21K. We had 2 people do this between August and September. 2 different people did this same thing in August, September. One of the videos is posted on my YouTube channel. $650 withdrew 20,000. We had another person do the same thing with 650 euros. They went to like 32,000 back in like here, back in all this, because it was just easy buys, easy buys, easy buys, easy buys. And then I remember when this happened, it's the same thing that happened now. Everybody got fucked. Everybody lost their profits, blew their accounts. Same thing. 90% of people, most people, well, I wouldn't say in the inner circle, but most people in the world, but even some of you guys pretty much got fucked. It's the same thing. We had easy buys for months here, all through September. It was like end of August, all the way up into like end of October, because the market topped out on like October 20th. Everybody got screwed in here, lost all their profits, and then was looking for the buy, 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 looking for the buy. I lost $14,000 in here, I remember, and I had to make it back. I made it back live, too. I showed it live over. I lost the $14,000, showed I lost it, and then I showed how I made it back in 3 days. Right, it was the same thing in here. The same thing, the same questions that happened here, I'm getting now. Like, Evan has gold top. The same thing that happened in here is the same psychology I'm getting towards being someone who's been trading, and the questions I get, the things I see in the chat. But up until that point, before it made this top, it was easy buys. Like the last 60 days was easy buys, easy buys, easy buys, right? Easy buys. And then at a point that turns over and the volatility kicks up, and next thing you know, market's moving more pips than you're used to, right? Right? We've had easy buys, easy buys, easy buys. And then market topped out, right? It could eventually just turn into a big recovery on the bigger picture. If we look at what happened back in October or any of these other drops previously too. But up to this point, a lot of us you get used to doing one thing naturally, the same way, the same way, the same way, the same way, right? Then these types of things happen. Market turns over. So you got to be prepared for things that can happen that are out of your control. Even if you could have 60 days of just you could have 60 days of the easiest market, and then 1 week that turns everything around. You could have 60 days straight of just like easy flow, or 30 days straight, like realistically since December. The reason I say 60 days is because since end of November, it's been easy buys. I've sent so many signals on buys since the end of November. You could have that in the market. Like that's where that's where I became, like, market conditions like this is where I became the most profitable. Is just taking advantage of those times where it's like a 30-day, 60-day trend. They happen. I mean, they happen in any market. They can happen in currency pairs with seasonality. They can happen with stocks. Downtrends, like whenever we get a downtrend, like we're not really, I wouldn't say we're in a downtrend right now, like we're having flow of that, but this could be a corrective phase depending on how gold trades the next couple of weeks. Like it came all the way back to $4,500. That's a very psychological level, right? It's not like a random price. If it wanted to, it's like I was like, is this thing gonna come to 4K? $4,000, imagine. Made its way below 4,500, which when you look at like 44 and 45, it actually makes sense that it pretty much came to there. Hey, it finally filled one of those gaps you guys have been talking about, though. It finally, like, everybody's the gaps. Like it finally filled some gaps. It finally filled some gaps. Right? almost retraced January's, pretty much all of January's gains, right? Like pretty much all of January's gains got diminished. Almost came back to the gap that was made at the beginning of January. So all those gaps that you guys are talking about every week, hey, they did come through. The market came through, right? Pretty much took away all January's gains. January started down here, right? The low of January is like over here, right? So it pretty much filled like all of January's gains, coming back to actually some structure in the market. So it really depends on how the next week or two goes, really, because if this could be if like, if we're looking at what the market did, it could potentially be like a buy the dip setting up. Maybe it goes back to $5,000 or $5,400. If this structure holds, like if the daily, like right now daily's bearish, so I think like if you're just trying to buy based off the daily, like maybe the daily flips or something like that, I mean, market might not be ready for that. You could wait for like the daily to actually flip like bullish. Daily hasn't flipped bullish yet, so I mean like green candles on the daily time frame. Like right now, the daily's still technically bearish, so it's like once the daily flips, maybe like if what I'm talking about, I'll give you an example. Maybe, I mean, if we look at these drops over here, you see this drop here on gold. Even though this didn't really recover much, the daily flipped there, but then it went down. And then market continued more. And you end up getting an engulfing candle down there. So like if you're really looking for the daily swing, like see what happened over here. Then you eventually had this engulfing candle. Engulfing candle got retraced. Like daily candles closing bullish. Because I know it looked like right now, because of how much it's dropped, it looks like an easy buy the dip. But you may still even have to wait for like a daily confirmation. Daily to form maybe some smaller type of rejection candles. That's one thing that could say, okay, this is like slowing down, maybe ready for that turn on the bigger picture. Because, yeah, we came all the way down to 4,500. And, like, I think as long as we kind of hold that, the daily, as long as we hold, like, that 45, like, that structure there, then, like, the daily could try to flip. But it's something to wait for. Like, we're not guessing and predicting things without seeing, okay, what happens to, like, if you were looking for a swing on gold, all I'm saying is maybe wait for the daily to close bullish. In between there, you could maybe catch some day trades at different times. Like, you don't got to always be pushing buttons, but if you're looking for that daily to go up, maybe wait for a sign on the daily. Like, if you're waiting for things to turn, right? Something like this, an actual rejection candle on the daily, rejection candle on the daily. That could be a sign that says, okay, it's actually turning over, maybe actually slowing down here to flip over, like reverse. I went over some stuff last night. If you're inside the inner circle, like I talked about the 30-minute rejection candles. I'm going to do another training tonight. So if you're in the inner circle tonight, make sure you guys hop on, because I'm going to talk about different ways you could approach this market. Everyone's going to be different. There's not one playbook for every trader. There's multiple playbooks, and one might work specifically for you. There's not just one playbook for every single trader. With a market like this, there's different playbooks and different ways to approach it. So there's not just one way to approach a market like this. There's multiple playbooks. That one playbook might specifically pertain to a certain type of trader, a certain type of an individual. Right? So this week, I'm going to be going over different types of playbooks and just different types of concepts and ideas of how you could approach the market. If you're inside the inner circle, I went over a few things last night. I talked about the 30-minute rejection candles, the pullbacks, if any of you guys remember. If you guys are like, that's why I say pay attention to anything I say, because there's different ways you may be able to approach the market or see the market. Different traders might see the market differently. One person's eyes might see the market completely different than another person's eyes. You guys are lucky. I have lots of years of experience on the market, and I've trained my eyes. So there's different ways to approach the market right now. Like, just depends on the time frames you're sticking to, your speed, your quickness, whether you're more of a scalper or maybe you're just cherry picking the market. I went over a few things this session right now as well. Like, I went over one way to approach the market. Well, two ways actually. I've gone over two ways you can approach the market this week, right? Just depends on the individual as well, like how you see the market. I'm going to be talking about that stuff tonight. I talked about one thing and I showed a live example of a trade that I took today. How to approach the market. Well, I've given you guys already a rundown of that. Some of you guys are still asking. I've already given you guys one rundown of how to approach the market, right? And I said how I'm going to do it this week, right? But there's different ways you can approach it. I'm going to teach that there's different ways you can approach it based on the time frame you're sticking to. If you're sticking to a specific time frame and you stick to that time frame, then you follow through with that time frame on certain rejection candles. I was talking about it last night. If you're on the inner circle last night, there was a part I was talking about it with the 30-minute. I was talking about the 30-minute chart. Like, when the market's like this, if you're looking for day trades and maybe you're a faster day trader, you could use the 30-minute for those rejections, bearish or bullish, and just follow the 30-minute rejections on bearish or bullish and try to mix them with the hourly. I had a little bit of a conversation about that last night. But I just gave you guys a live example of a trade I took today, right? And I explained it coming into, so one way you can approach the market is just looking for a setup. So a setup coming into a time. It doesn't have to be, you don't have to predict what the market's going to do from point A to point B this whole entire week. You can just go into a time, see what the market's doing, if there's a setup there, if there's something you can identify. So that could be multiple times, though. That could be New York, that could be Tokyo, or that could be London. It's like, okay, tonight I'm going to go see when Tokyo session's opened and Tokyo session's starting. I'm going to see how gold looks and see if there's a setup around there or an entry. If there is, maybe I'll go for it. If there isn't, I'll wait for London session. Same thing, same routine. That's one way to approach the market this week. I've talked about that pretty much the entire session. The other way I talked about, again, another way I talked about this session, there's multiple ways, but I can't go over them all on this session. The other two are going to take longer to talk about. The other might take like 2 hours to break down and talk about. And I've already been on, I think, for like over an hour. So the other way was scalping, day trading. Like, that's going to be a full lesson tonight. I'm going to go over it in the inner circle. That style might not be everybody, but I'll show you how you can catch moves. You just have to learn how to get used to the volatility. Like, it'll be more of like a scalping day trading style, faster, but honestly, it might not be for everybody because of the way the market's moving. But I'll show you different ways you can approach the market. But you kind of got to stick to one, because if you're scalping, you got to be taking multiple moves and taking the setups when they're there. Like, if you're following the 30-minute rejections, whether it's bearish or bullish, like, you got to follow them bearish or bullish and go for them. Bearish or bullish, go for them. 15-minute rejection, even 15-minute rejection candlesticks right now on the right pullbacks. Like, if you're getting the right pullbacks, can lead to good moves. Like, even just a 15-minute rejection candle can lead to good moves. But I went over, so that's like one way you can approach the market. Like I said, like, use your sessions. Is there a setup there? And then I also talked about price. So I talked about, again, price. So there's two things I went over on how you can approach the market this week, right? Price, like, what price is it at? Setup, price. Like, is there a setup? I see something plus price. I talked about every $100. There's different ways depending on the the thing I realized, like I used to be an educator for years. I've taught thousands and thousands of, like, tens of thousands of individuals. So I've actually had the opportunity to study thousands of individuals and learn psychology with the market. Not every human's the same, right? Like, we all have different same attributes, similarities, but not everyone has the same eyes to the market. So that's why sometimes I teach different concepts, because I understand some of these different concepts might pertain to certain traders too. Like, most of the things I teach are duplicatable for 90% of traders. But there can still be those traders who have a bit more experience, or maybe those traders, yeah, like, comes down to experience too, I think. Someone with 4 years of experience is going to have different eyes than someone with 4 months. Someone who has 4 months of experience is going to have completely different eyes than someone with 4 years, right? So, I mean, like, there's different ways, but I'm going to go over it tonight. If you're in the inner circle, some other things on how to approach the market this week effectively and not get burnt out, not overtrade, still be able to find some setups, all right? We'll be on the inner circle session tonight for that. I already went over some stuff with you guys, again, on how you can approach the market this week. Remember, I said I'm not taking another trade. Look, it might be coming down to 4,600, right? Might come down to 4,500. Like I said, I can wait for good prices. I don't have to rush price this week. Market literally just gave me a 700, 800 pip reaction. That's not even a normal trade on a regular week, right? So that's where less is more this week. Like, you have 2 good winning trades. Those 2 good winning trades could be over 1,000 pips, 2,000 pips. My last take profit for the trade this morning was 450 pips, so like 500 pips between the zone. And it's like the market still moved $94. So it's like the pips can be there. Like, the pips can be there. This was the trade I was taking this morning. Could have realistically used even a bigger stop loss. This is the week, or maybe even month, where patience is gonna grow your account, and over predicting Bitcoin swept the lows, but there was a huge rebound. Maybe are they dumping the gold, going in? Where's that liquidity gonna go? It's not gonna be instant. Like, the liquidity that shifts from gold to Bitcoin isn't gonna be like instant. Take time probably. Bitcoin swept pretty much. Yeah, we swept the low. We literally swept underneath there. I think we swept under. Did we get underneath there? Almost. Ethereum might have. Ethereum almost came to $2,000. This is probably another buy the dip setting up. Like, where could the bottom on Bitcoin be made? Like 75, 72 area. Between like 70 and 75. If it holds here, there is a lot of support. If we break there, then maybe we go down to the 60s. But like, there's a lot of support here for Bitcoin. Does it hold this area? Maybe. We'll probably get like a rebound, at least some recovery. I mean, if your name of the game is like trying to acquire more and at cheaper prices or buy the dips, like me, I've been a trader for over 10 years. So when the market presents me opportunities, I go for them. I don't overthink it. I don't ask 20 different questions like you guys. All right. If the market gives me something that I know I should do, or like, like if the market's going to give me an opportunity to do something, because everyone was bullish here, why not now? So like, think about it. If we're all screaming, everybody was screaming, we were all screaming up here, Ethereum's going to go to 5K, 6K, break 5K, right? I mean, if we were all bullish up here, I don't overthink things. I just act. Like I don't if the market's gonna give me an opportunity to be like, yo, this thing is down for the last 1, 2, 3, 4, 5, 6 months going on, I'm not gonna overthink it. I'm gonna try to position myself as much as I can. Right? Can the market go down more? Yes, but that's where I'm not like a perfectionist of trying to accumulate things. If the market goes down more, then that'll be a different conversation for a different time and where the market is, right? But like, if the market's dropped for like 5 months straight, I'm not gonna look at this as panic, and I'm not gonna sell here, right? I'm not gonna sell here. That'll be dumb. I feel like that would be dumb. I'm not gonna panic sell here, sell the lows. I'm gonna look at this as an opportunity, more so. Solana went below $100. What if you could get Solana at 80? That's cheap. If you get at 70 to 80, that's cheap. That's cheaper. Ethereum's almost came to 2100, almost 2000. That's cheaper. So I'm gonna approach the market how I always have and not overthink things. Like, I know you guys got questions. It's like, okay, if it breaks here, where does it go? We'll find out. Like, it could go to 2000 or maybe between the last low. Like, look at where it is realistically on the weekly. It's testing here. Makes sense. And then, like, we have the low down here. Why? Like, look how fast gold and silver went up. Look how fast gold and silver went up. Look how fast gold and silver went up in months. Couple months. This is why you guys are asking if we're buying again. Bros, and ladies and gentlemen. If there's a buy, I'll let you know. Alright? If I enter a buy, you guys will know. You guys will know. Alright? you don't. Some of you guys have been asking if it's a buy since 30 minutes ago, an hour ago. I'll let you know. I'll let you know. If I enter a position, how many times do I tell you guys when I enter a trade? A lot. How many times? Like, a lot. So just calm your keisters. Some of you guys have been asking if it's buys since I got on. Just calm your horses. Calm your horses. All right. It's about to hit 4,600. Look at everything out. What was I talking about? So what was I explaining? We gotta wait for the good prices. Look at the 4 hour. 4 hours looking like it wants to drop though. You know, that 4 hour could have been sells off the 4 hour. We have more sells, so like I've been seeing way more sells. Been seeing way more sells in the last like few market days than I have in the last few weeks. So like, rejection candles are working nice on sells, pullbacks, like 15-minute and 30-minute pullbacks. I'm gonna go over it tonight. That's what I'm gonna go over tonight. That's gonna take more time to go over. Buys at 4,600, maybe. We could watch it. Maybe it's a learning lesson. I mean, it'll probably bounce off of it a little bit, but bounces right now are like 200 pips. So it seems. So like, look how fast gold and silver just went up in months. Like, in a matter of months, we've seen things that usually don't go up fast go up super fast. Crypto's fast when it goes up. When crypto goes up, it goes up fast, normally, naturally. Explosive, like what you've seen literally gold and silver doing these like months and some weeks. Like gold, silver just rapidly exploded. That's like how crypto moves when that shock comes in, when liquidity really starts moving in crypto. It moves how gold and silver just moved for the last like 2 years. Like even the last like weeks, months, we've seen it. So like, why am I going to treat every opportunity the market gives me like that? Because like, when it moves, it's going to move. And I'm either going to be in that or not in that. Right? So it's like, If I'm scared of lower prices, yeah, lower prices could come, but all it takes is like what silver did, things just kicking off, or like gold did, liquidity really moving in, and you have that 1 or 2 months where it just, does what it does. Can that happen at lower prices? For sure. It doesn't have to happen where we're at right now. It can happen at lower prices, but like Ethereum's chart, this thing's dropped 5 months straight. So like I'm obviously gonna start really trying to accumulate like what I can as this is here and goes down. Like last night would have been perfect if you bought it like 22s or 21s, right? Solana too, like it went below 100. I'm not gonna be fearful. Personally, I'm gonna buy in times of fear. And everything's in a fearful zone right now. Everything's in a major demand or major support zone pretty much on the charts, where it's like, why would I sell my coins here? Like, yeah, they could go lower, but the lower is literally into like the best buy zones. Like the lower it goes, yeah, like it could go lower, but literally a bit lower is like some of the best buy zones, even though we're in already really good buy territories. So I mean, for me, like I look at what gold and silver just did and how much. Oh my God, see, 2,600. That's why you wait for at least good prices. Like, see, 4,600. See, I told you, wait for those prices. I'm showing you guys how to approach the week right now. Stay patient. Even there, it could have been a break and retest on 4,700. I didn't even see that till now. Look, 4,600. We could have caught 300 pips right there. This is why you guys gotta stop asking me in the chat. Are we buying? Are we buying? Like when it's up here and here. I get distracted by those. I don't like just ask normal questions. Stop asking me when we're buying. I'll tell you when. You guys want to mess with my psychology? Just keep asking about trades. And then I don't send the trades. And then I miss the trades. That's the thing. When you guys are always spamming me, I'll miss the trades. Let me focus. That's why I don't like looking at the chat sometimes. Because I'll see like, are we buying? Are we buying? Is it a buy? Is it a buy? Where are we? And then I'm like, oh my gosh, man. And then my DMs. I was prepared for that, but I got distracted. All right? I'm blaming you guys. I gave you a trade setup too. I even said if it comes to 4,600. Fucking hell. We could have got 400 pips right there. For fudge sakes. At least I'm showing you it works in real time. Fuck, that was the buy. And it's only, man, that would have been a good buy. It's still 11 a.m. It's not like it's 4 p.m. Well, even if that was 4 p.m., actually. Damn it. I know you guys want to trade. You guys, I know, but I was waiting for the trade. That would have been the trade right there. Fuck. That was it. And I mean, we could have been out because it moved 400 pips. Like, could have done like a $15, $20 stop loss or something. But it's the price. You gotta wait for these prices. There was a nice break and retest at 4,700. We could have caught we could have caught that. We need patience. See, like, I'm waiting for the trades. Like, if I would have been in buys there. I'm telling you. If I was... That was the signal. That was the next signal. We would have been 2-0 today. That was the next signal right there. I'm telling you. What I went over, I'm telling you, that's how I'm going to approach the market. Is wait for these prices. I could have caught 550 pips there. Could have made like 2-3K right there. Sheesh. Sensitive. It's very sensitive to these prices. Well, it can be. Lines up with a nice imbalance here too, like to the left. Nice structure point. Swept those lows. 4,600. I told you guys. I've been training you guys on this shit to prepare you for the week ahead. All right. I did say one of the ways you want to approach this week is use these good prices, you know, the good prices. For fudge sakes. Strategy works. Strategy works. All right? Strategy works. You just got to be patient. Don't let you just got to be patient. Even if it sells, like 4,800 would have been 4,800 could have been perfect sells over there. We bought at 4,700 this morning. We caught the buy at 4,700. If you're really like advanced, like you're really quick with it, you're slick with it, break and retest on 4,700. But we missed the buy right there, guys. I hate to break it to you. I hate to break it to you. And it's like you can't enter when it's made this move. That's where it's like, usually it's like when we get reactions, it's like, okay, let's wait for the 30-minute to close and we'll enter, or the 15-minute to close. But it's like we want to get the price, to be honest. Usually we'd be like, yo, if the 1 hour closes, or maybe the 30, we could get in, maybe on the pullback candle. But the thing is, it's like, if we just hop in, the pullbacks right now are fucking 300, 500 pips. I told you guys, the strategy works. Did anybody catch it at 4,600? The strategy does work. You just got to be patient. The strategy works. You got to just be patient. God damn. Could add buy limits there. Even buy limits around those prices. So, is it going to hit? It might hit 47. Well, it already hit 4,700 there. We got to wait. It might hit 4,700, react, come back. Maybe go to 45. We wait for 45. Fuck. So having patience, I'm telling, like, even in the sessions, the right prices. Like, we're just gonna trade these prices probably this week. Every single time it touches one, be prepared. Every single time it touches a price, be prepared. Did anyone click buy? We had it there. I did talk about it. I did talk about 4,600 before it even hit 4,600. I explained the strategy to approach this week. All right, and one of the ways you can approach this week. So I'm showing you it works at least. Be prepared for like future days. You know, future sessions. Maybe Tokyo tonight, later today, London. Different prices, different reactions. You could get literally. I'm telling you, I've seen it enough times already because I've been on the market since last night. But I haven't been sending signals. I only sent one signal today. Could have sent two. We would have been 2-0 today right there. But I've been watching these reactions happen. I've seen enough so far. After a day or two, after a day or a couple sessions, you see enough. Damn. I mean, be prepared for market to potentially have still those reactions at different prices. Like, it's not the only price. It's not the only price it's gonna hit this week. You know, I called a buy at 4,700 this morning. Could have called one there at 4,600. I should have just put a buy before it hit the price. And yeah, you can literally see this is the 1 minute. Look at how it reacted perfectly. Damn, 1 minute. 4,600. Whole numbers. The market likes whole numbers. So for those who are new here, the market really respects whole numbers, round numbers. Some psychology to them. You can look it up. Whole numbers in forex, whole numbers in trading, psychological levels. They end in zeros. So in this, like, zeros, double zeros, full zeros, like full levels of zeros. There's usually like order clusters around here. So like around these prices, they can be like, there's psychology to them. They can be like magnets. Price tends to be drawn to them. Once it gets close, if momentum is strong, the price often moves through the level, even briefly. But there could be order clusters even around these prices, like a massive amount, like a lot, like a big amount of buy, sell, stop, buy, stop, take profit, stop loss orders are placed around these levels, below them, near them. They have you could say like institutions influence them, like banks and hedge funds have like trades or options and contracts at these exact increments, which leads to volatility around them. There can be order clusters around them. You can see, for example, how 4600 reacted perfectly. Does it always react perfect like that? No. You have to have some anticipation that it can go below or above. So, like, if you look at 4700, 4700 was good buys this morning. You could have caught up to 900 pips. 4800 was good sells this morning. You could have, again, caught up to like 700 more pips, depending on how long you held. But for the moment, let's just say. Like, if you look at 4800, you can see it was, to me, like a perfect reaction because it didn't go that much above. Like, okay, it went above like a bit compared to how much it dropped. You have to kind of have anticipation that it can do that. Like, obviously, you just saw how 4600 reacted perfectly, which can happen. It can do that. But, like, it could have went a little bit even below. Like, okay, it went, like, it did go a couple dollars below, but not that much if you look at $4,700. If you look at $4,700 here, you can actually see how much it went below it, even here where I took the trade a bit below. So, like, there was some drawdown there, even though the level still held. Maybe take it, like, I took the trade after it came back up. So, like, these levels, like, this is just today. We're talking about 3 price levels. Like, there's obviously more. There's different ways we could find other trades here, too. Like, these aren't the only 3 trades that probably could have been found using other strategies. But just using this one thing, just looking at prices, there tends to be, like, an order cluster effect around these. You can look into it online. A lot of people talk about it. Like, probably go on Google and type in, like, whole numbers, round numbers, orders, order clusters, and stuff like that. Like, tends to be a lot of orders around whole numbers. That's why they are reactive. More volume will enter around them. Can lead to trades just like that, like literally, like you just saw. I see like a handful of people took $4,600 buys. Can be reactive moments where, like, if it's the right time, like, I mean, there's gonna be different opportunities. Like, there was a sell at 4,800, then there was a buy at 4,700, and another buy at 4,600. There was a break below 4,700, as you can see. It broke and ended up retesting it right here. Maybe that's like the next trade. Might have been able to spot there. Like, you see this break underneath, retest. So I'm just showing you guys, like, really one thing here. Price, how it can be used as one, like a magnet, but more like a support and resistance as well. I mean, this week, it's only Monday, so, and this was a New York session. There'll be reactions in other sessions. Tokyo session, London session, New York session again. Like, I would just give yourself the ability to wait, stay patient, let the market come to those prices. You can even see it just tapped 4,700 now. So it's like you wouldn't want to buy here. Like, obviously it could go up, but it's like it's at 4,700 like resistance. So it's like you could literally see price just tap 4,700. And instantly it's reacted like, yeah, like it's going to react almost 200 pips soon. But yeah, like it's the 1 minute, 4,700's right here. And you can see the price reaction that's happened already, almost $20. So you don't want to be buying at these prices. Obviously, when it's pumped, if it's pumping towards a price, it wouldn't be the smartest thing to buy if it's pumping towards a price, right? See, 4,700 just reacted, almost $25. So that's almost 250 pips. It just did a $20 reaction. if it's pumping towards one of these prices, be mindful. Like, you might be looking at it like, oh my God, price is going up, I gotta buy. But that could be an easy rejection. That could easily, in minutes, as you can see minutes right now, you could see how $4,700 reacted in minutes. How many pips? 230 pips. Just like $4,600 reacted in minutes, 360 pips. So you can already see in 3 minutes, 4 minutes-ish, a $26 reaction might go down $30. And that's just in 2-3 minutes, right? Well, like 3 minutes. I mean, normally, like, think about how we usually trade gold. That would have been like a good TP, no? So it's like, take advantage of these prices, trade them how you normally do, in a sense, like approach them how you normally do. Like, don't be overthinking. Expect, okay, prices could react here. If it reacts, let's see. Like, let me put a lot size. Let me put some trades. Because you could maybe get that full TP you're usually looking for in minutes. Close. These are the reactions you're getting right now that are literally a 5-minute candle dropped almost 300 pips there in a matter of minutes. Literally, we saw $4,600 react in a matter of minutes. So remember this stuff for future sessions. I'm going to wrap it up for the day. That's going to be it for me. I call it a day here. Just want to jump on, break down the trade. We caught a good trade this morning on gold at $4,700 buys. I broke that down already. Some of you guys caught 4,600. I was talking about that before it even hit 4,600. We could have all caught it. We all could have caught buys there. I did explain how it might come there and react. Obviously, it reacted more than I, even just like small movements. Like this morning, I was just looking for like this to bounce up, and I'm like, if this bounces up, it's gonna be a 500 pip move probably. Well, how do you gauge your risk? Well, like, you have to wait for good setups. You have to trust. This is why we have to wait for good prices, so we know at least we're entering around good prices. Because, yeah, so you're asking you how, you may have to use a smaller lot size, right? Now, maybe not so much. Like, you could, like, if you're getting a good price and you use the same lot size you always trade with, same risk, you need less trades to really make it a good week. If you have 2 good trades, your week could probably be done. If you trade with the same lot size you used to, same stop loss size, that's where these prices can help out. They can help you get good entries where it's like, okay, maybe I could use a $15 to $20 stop loss. Right? I think you still have to give yourself some breathing room outside the zone. It'd be good to give yourself breathing room outside the zone. Breathing room outside the zone. If you look at $20 is like mine was $20, but I said if we break and close underneath it. So even using like a break and close rule, like I do a lot of times, I'll use a break and close. Like if we break and close underneath this area, then it's invalid. You may need to give yourself that breathing room of even like $20 though. $10 is usually what I use on signals, but it may be like $10, $15 max. If you're trading the same lot size you're used to, it's gonna mean more money. But you gotta be like, that volatility is gonna be there. Like same lot size, more money. But if you lose a trade, $20 move, then right, bigger loss potentially. So there's different things you could do. It depends on how you're thinking about with your approach. It's like I could decrease my lot size because I know the market's swinging hundreds of pips, or try to kind of approach it the same as I always do. Give myself a bit more breathing room. Give myself a bit more breathing room than usual. Try to use like a similar lot size, but give myself maybe a bit more breathing room. And looking for a good price, like a good entry around a good price. Because if you're entering like in the middle or random, like if you're just entering random trades, you might not be getting like a good entry to support that lot size that you use. So it's like wait for those good entries where you're likely to get more reactions. What is this? It sounds like friggin' like what's that one movie? Friggin' Anchorman. Hearing Anchorman. I mean, two trades at like two trades at the right lot size with the way market's moving right now. Two good trades could really make your week, I think, with the right lot size. Because like these are hundreds of pips movement, like that, well, like thousands of pips movement. So the right lot size, I think, right trade, right entry. Like I think less is more in these weeks, maybe ahead of us or this week especially. Less becomes more. It's like if I have two solid trades, right lot size, could make the most out of just those two solid trades if the market gives me a significant move like this morning moved 900 pips on a trade that would normally move like 200 pips. You're right there, 4,600. This thing just moved 1,000 pips to 4,700. It didn't take that long to do it. I might reject 4,700. I already did it once here, and it did it on the 1 minute. The minute it touched it, the moment it touched 4,700, it went down almost 300 pips. Now maybe there's some sell reject. Like I wouldn't buy here. This is not a place where I would buy. That would go against like the concept. So it's not a buy here. If you're wondering, it would be probably more like a sell. Maybe some rejection here. Doesn't hold, it's like waiting for the next price. Let the next price be retested. If it doesn't hold, it'd probably try to break above it then. If it doesn't hold. And then maybe it ends up turning into this type of zone. Right? 4,700 might make some resistance here now. So I hope you guys learned some stuff today. We had one trade. I sent one trade out today. It was a good trade. Moved like crazy. Well, you just gotta look at where price is. Like, if you're chasing price, it's like, so a buyer would chase price. Someone who buys here would be chasing price because it's like, okay, it's at 4,700. It just moved up $1,000. That would be chasing price. Or like, if you're buying, imagine buying at 4,800, like $4,800 for example. Imagine buying up there. Imagine if you were buying right here at 4,800. Right, price already moved at that point, like you're chasing it. There was even like maybe one opportunity to get into that, but it's at a very psychological price. It would make no sense. It pushed up to that price, 4,800. Why would we buy there? See, even here, you just got a another rejection off of 4,700. So it's like, even if you're used to taking buys, you got to look at it like, would this be a buy? No. I wouldn't buy at 4,800 or 4,700. If the market's pumping to it, I'm not going to buy at it. Depends on how the structure is. Like, I bought at 4,700 this morning, but the market was pulling back to it. Like, I took a buy at 4,700 this morning, but market was pulling back to it, right? It's more like a break and retest. Whereas now market's pumping to it. So you're here, it's like, you want to buy it. If you want to buy, you shouldn't. When you're at that price, you should wait. Look at 4,700 just rejected. Literally all the live analysis I've gone over has been playing out. I talked about 4,600, talked about 4,700. You see what's going on here? Strategy works. Strategy works. Strategy works. So like even if you're at a point where you're like bullish, like you might be bullish at 4,800 because you see price going up. I drew a smiley face there. You might be bullish up here because price is going up, but you have to look at the prices sometimes and be like, is it a smart buy to buy at 4,800? Like just like, would it be a smart buy to buy there at 4,700? At that price, after price pumped up to it? My buy this morning makes more sense because you look at the chart, it's pulling back to it. It's pulling back. It's coming into previous structure. Like there's a support here, 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 resistance, resistance, broken high. So I'm also trading with some confluence here of like technical analysis, supply, demand, an area. Pulling back to 4,700, not pumping towards it. Like market's pumping towards 4,700. Right? You wouldn't want to buy at that, right? If anything, it's like wait for it to come back to 46. Wait for it to break above 4,700, come back to 4,700. Or wait for it to come down to 45 or 44 or 43. Easy ways to find buy setups and sell setups. I just showed you live like how to find buy and sell setups right there. Like the sell, I called that out. I did say there could be, even before it came to 4,700, I said there could be rejection there, right? But it's like in practical sense of thinking, like if the market's pumped up, would I be a buyer here? Should I buy here? Should I buy here? Yeah, so waiting for like good prices. Like I said, we saw 2 live examples of how price reacted. So it's better to wait, not chase. Not chase. Wait for price, wait for pullbacks, dumps or pullbacks. And watch, I bet you'll see a few solid reactions like we saw this session. I mean, with how the market's moving, like reactions, like that just reacted like almost $40. So you're bound to be getting like hundreds of pips reactions. If the price reacts, like you're bound to be getting like hundreds of pips of a reaction. If you get a reaction off of that price. This just reacted like almost 400 pips at the most. Right at 4,700. Let me remove some of this stuff. Whoops. So you can see just in the last couple of hours how 4,700 could have been used. Maybe for buys. I showed how I caught some buys this morning on it. Maybe for buys there. Even a sell right here. Or a sell here on that break, obviously, but I won't count that one. I'll just say this one. Even though, yeah, that one. One price, one level, multiple reactions. Looks like it might try to go back down to like the low around 4,600. You don't have to predict. You just have to wait. That's the thing. Like, obviously, when it gets close to prices, you can predict. I predicted a couple things there ahead of time because it was like price was on the way, right? Like, I said 4,700 might react for sells because price was already kind of on the way there. You know, I didn't predict it too ahead of time. Same with 4,600. I was saying, like, you know, like price might react off of that if it comes to it. So it's not about predicting right now. It's just about waiting and letting the market come to your price and seeing how it's delivered there, how the market's delivered to that price, lining up. Like what else is it lining up with? Any other technical analysis? Any other concepts I can see? It's not about predicting everything. It's about just kind of letting the market even just come to price, right? That in itself can work. Remember what I said about 4,700 before it even touched 4,700, when it was on the way to 4,700, how we could react off of there. And just right there, like, you have a trade that could have been taken here, one, right? That could have been 500 pips. The trade that I called out this morning was at 4,700. Boom, that thing went up to like 900 pips at one point. We caught 500 pips on that. 4,600. So you have like multiple potential entries which provide reactions. Who knows? Some of those reactions are going to be bigger, smaller. These have been some pretty solid reactions. And then up here, you had the 4,800. So now it's like, look, as we watch price, we see there's more setups that actually happened on this chart throughout the time. You can see how 4,600 reacted perfectly. You can see how 4,700 just reacted. The reactions are enough for the time, even if it's 15, 20-minute trades. Like, look at gold. It's 4,700. It's down $50. I'm in Inner Circle for a few days. Already took half of the membership from the market. Everything I learned so far, I'm not 20%. Nice. Christian, what's good? So, damn. I'm just warming up. I want to get comfortable. Like, I could have sent more than one signal today, but I want to warm up and get into the flow of things. It's good to see these reactions too. So I was on the charts pretty early yesterday because I was like, I want to just watch price a bit and see like how things start reacting at levels, how London session trades, maybe New York. I know I could have sent more than one signal today, but at least we're seeing a lot of these reactions happening. This helps kind of train your eyes a little bit going into the week because like you just had the weekend. Obviously on the weekends, you're not on the charts. You're not watching price move. Market's not moving, right? So like I find coming into the week when you see a couple reactions and stuff, you see your strategy playing out, it helps kind of like flow into things. Like we've seen 4,700 react, we've seen 4,600 react, we've seen 4,700 react. Some of you guys probably saw 4,800 this morning. So you see these reactions, you build some kind of like process going into the week. Like you kind of start the flow of the week. Like, okay, you're sharpening your instincts, you know, sharpening those reactions a little bit when you're seeing these things happen in real time. It helps kind of with that intuitive reaction going forward, like what to prepare for. Like, okay, I saw this happen, I see these things happen. Gives better preparation, I find. It's okay to miss trades. Every $100, crazy. Usually every $100 we're not, but now we're looking at every $100 now on price. That's crazy. Different entries, different prices. That's why I think these prices will be beneficial with the market climate. Even 4,500, even buys like this. Like reactions are happening that are going 500, 700 pips on a couple candles and then coming right back. Look what happened at 4,600 on the 5-minute here. Like, you have a high made, and it's kind of already when price is pushing up at that point. Breaks out of this high. Breaks a bit above 4,600. Almost comes right back to 4,600. You know, like that's like a similar style of the trade this morning in a way. But that's more like inside the trend. But still, like, revolves around that price too. Like, you break above it strong and then you pull back to it. So yeah, there's usually we take trades like in the middle too. Like, but now I'm just gonna be waiting for like the prices. We'll see if we find another crazy trade this week. But yeah, keep those levels marked. Study them this week. And I'll see where the market's at tonight. Tokyo session, I'm going to stream. I'll be in the inner circle tonight during Tokyo session. We'll see where gold's at. I do think eventually this is going to turn into a, you know, like it's probably a big buying opportunity coming. It's just the market's not going to do that in one slingshot, like one shot. Like, it's going to accumulate that. That's probably what price is trying to do, is like accumulate a big swing. Like, this is a huge drop that could try to turn into, like, if everything holds, it could try to turn into a bigger move up, which would be like thousands of pips potentially. Like, it could go back to 5K, 5,100, which is like thousands of pips potentially from like the right price. I don't think it's as easy as just clicking buy and hold, unless you use a really big stop loss, right? Maybe get different entries. Like, you got to use probably like a really big stop loss maybe to just click buy and hold and try to swing. And that's not the sexiest looking stop loss, right? But I do think this could set up for a bigger swing if we watch it develop over the next couple days. I'm going to wrap it up though. I'll be on tonight in the inner circle if you guys are in the inner circle. I know a lot of you guys are. We'll be live for Tokyo session tonight. See how the market's looking during Tokyo. What it's doing. But I'll see everybody on that session. If you're in the inner circle, I'll be live later tonight inside the inner circle. Tried the 50, but price moved too much. Can't. Yeah, like, I'm just the 100. Yeah, like the 50. I was looking at the 50 and I mean, few months. The 25 level is still going to be good to trade, but not right now. There's just too much volatility. We might be trading the, like, it'll calm down eventually. It might take some weeks or months. Let's see. Like, the $25 levels and $50 levels are still key, but I find because how much the market's moving, those aren't going to get respected as much. You'll still see them get respected, but yeah, like, that's why I came on here and said just use the good prices, like the really key prices, because it's swinging enough to do so. I find you just got to add maybe a bit more patience on top. The $50 levels, like, those are not holding. Yeah, like, I noticed that. Those are not really holding. That's why I haven't talked about them. That's why I haven't talked about, like, using those. Because, like, I already noticed, like they could be useful, but they're not holding as much. So maybe the 75s are. Maybe some 25s do, but no, I already noticed that kind of last night. Like, I was starting to notice that last night as I saw like 4,700 react, 4,600 react, and 4,500 react and stuff. Like, when I started to see those reactions more, and then not really any on the 50s, I would just stick to what I went over. I mean, you still could get like, this just reacted off of 50 right now, but like, if we look at most of them, probably not. I don't think so. Like, if you look at, let's see, like, okay, like, here it did scout, like, here it did 3 times, and then there it didn't for sells. It went up to like 48. So I mean, like, it can, and like, there is reactions and there isn't the clean. Like, there is if you really look at the prices. There are some, but it can sweep down to like the zeros. I'll be on the inner circle tonight. If you guys are inside the inner circle, I will be on tonight session. Let's see, I already added them. Yeah, I think I added that. Yeah, I added that person already. Let's see. Yeah, I added them. If you're inside the inner circle, I'll be on tonight. Yeah, I gotta add the indicator. Yeah, I'll add you after this. I'm gonna record some videos right now. Real quick. And then I'm gonna get to that stuff. I still have to add a bunch of people that just joined. Yeah, the 50s, they can react, but maybe just, I mean, for the risk, because if you're going to be taking risk this week, the risk is volatile, so it's like it's worth like trying to get that lot size at the right price. Because then if the 50 doesn't work, you're going to, if a 50 double doesn't work, it's like, it's probably going to go to the zero, and you're going to be like, ah, man, I should have just waited for this.